Hello friends, we are now ending on to the last revision lecture, that is foreign trade policy. I have completed all revision lectures of GST and thereafter I have shared my classroom lectures related to customs to a greater extent, so that I just wanted you to go in detail. Thereafter, the last lecture is foreign trade policy, and with this, the revision lectures are completed. Now, what is this foreign trade policy about? Foreign trade policy is a set of guidelines or principles which are set for promoting the international trade. When it comes to international trade, that is not into the domain of this Ministry of Finance. It is into the domain of Ministry of Commerce and Industry. Because in foreign trade, we need to discourage or restrict imports and to encourage exports. But if this job is entrusted with Ministry of Finance, there will be conflict of interest, because Ministry of Finance is looking into the revenue generation. So then there should be more of exports, there should be more of imports, because more of imports leads to increase in the customs duty revenue. So there is a conflict of interest. So therefore, they have delineated this particular concept of foreign trade to Ministry of Commerce and Industry, and they are asking Ministry of Commerce and Industry to come out with various measures in order to restrict the import and to encourage the export. Accordingly, this power is given to them via Foreign Trade Regulation and Development Act 1992. Thereafter, this Ministry of Commerce and Industry delegated that work to a board, a dedicated board called as DGFT, Directorate General of Foreign Trade. That Directorate General of Foreign Trade will come out with the guidelines as to how to restrict the imports and to encourage the exports as a 5-year plan. And that 5-year plan is known as foreign trade policy. This foreign trade policy will get updated every year, but the broad spectrum is going to be the same for a period of 5 years. And this foreign trade policy, which is developed by DGFT and will be implemented across the country through their regional authorities. So we have regional authorities. So the hierarchy is this way. First, Government of India. Below that, Ministry of Commerce and Industry. Below that, DGFT. And below that, regional authorities. Now, what is the difference between foreign trade policy and customs? If we take the mind of the international trade as foreign trade policy, the body of the international trade is customs. Because what to import and what to export is not given in the Customs Act. Of course, few prohibitions are there in Customs Act, but what to import and what to export needs to be decided by the foreign trade policy. And then that will be incorporated into the Customs Act, so that the customs officer will know whether this product is prohibited for import or export, or what all the formalities needs to be done. So the procedures like how to import, how to export, which value to be adopted, and all this compliance mechanism is under the Customs Act, whereas the brain of this foreign trade is with foreign trade policy, that is DGFT. Then next, what are the contents of the foreign trade policy? We have in that a basic policy which contains the classification of imports and exports. Imports are broadly classified into 4. Prohibited, meaning you cannot import. Restricted, meaning you can import with a license. Whereas the next area is freely importable, which means you can import it without any kind of restriction. Of course, freely importable does not mean you can import without payment of customs duty. It does not mean that. Freely importable means without any license you can import. And reserved for STE, which means that only state trading enterprises are allowed to import those goods. So, for example, food products you cannot import. It can be imported only through Food Corporation of India. Petroleum products you cannot import. You can import it only through ONGC, IOC or BPCL like that. So like that there are certain goods which are reserved for STE. If you want to import it, you can import it only through these state trading enterprises. So the imports are classified into 4. Same way, exports are classified into 3. Prohibited, you cannot export. Restricted, you can export with license. Freely exportable, you can export it without any license. Here free does not mean again customs duty. It's not about customs duty without having any license. This basic policy will be there in the foreign trade policy. Then various export incentives. So you can see this. Foreign trade policy, what are the contents? What are the contents of foreign trade policy? So we have basic policy with export incentives. So basic policy I told you, export incentives, because what is the objective of foreign trade policy? To encourage exports also. So various incentives are given under foreign trade policy like advance authorization, duty-free import authorization, duty drawback, EPCG, MEIS, SCIS, then EOU schemes, deemed export or not. There are many incentives which are given under foreign trade policy to encourage export. That incentive will also be there in foreign trade policy. Then, Handbook of Procedures. This Handbook of Procedures contains the methodology to be adopted for making an application in case the goods are restricted. Or if I want to avail the incentive, what is the methodology for that? So these procedures are there in the Handbook of Procedures. And finally, harmonized system of coding, HSN. That is, how the policy restrictions will be spelled out in foreign trade policy. Simple, it is linked to HSN. You are importing a particular product, and that particular product will have a 8-digit HSN number. You know that. So once you type that 8-digit HSN number, you will know the policy restriction as to whether it is freely importable or is restricted, etc. So that is the advantage. So these are the contents of foreign trade policy. And when I say license or authorization, so restricted goods can be imported or exported. How do we know it is restricted? It will be given in the foreign trade policy. So restricted goods can be imported or exported only when you have a license. That license is a colloquial word, whereas the normal law word is known as authorization. So only when you have an authorization, you can import or export restricted goods. And who will give that authorization? DGFT only will give authorization. You can see that DGFT issues authorization, that is permission to import or export. Then the next thing here, what is this foreign trade policy? I told you already. Set of guidelines and instructions. Set of guidelines and instructions issued by CG, Ministry of Commerce and Industry in matters relating to import and export of goods in India. That is what foreign trade policy deals with, to decide what to import and what to export. Then, what is the difference between FTP and customs? I have given there. FTP regulates, develops and promotes international trade, whereas customs is what it will do. It will contain procedures, valuation and consequences. Then, the provisions of foreign trade policy should be governed by an act. And what is that act? Foreign Trade Regulation and Development Act 1992. And this will be formulated and developed by DGFT, Directorate General of Foreign Trade, and implemented by regional authorities. So whatever the basic aspect of foreign trade policy I have discussed is into this particular chart. Then, under foreign trade policy, we discussed the classification. You can see there, imports are classified into prohibited, restricted, reserved for ST, and freely importable. I discussed that with you. Same is the case of exports. And what is authorization? Permission or license to import or export. Then, Now, along with this basic policy, we have some special provisions also. With respect to normal goods, that is original goods when we are importing, first time goods when we are importing, we have a policy. Example, you want to import a laptop. For importing laptop, we will check for the authorization. Is it required or not? Yes, authorization required. Now, as a second hand when I import, whether authorization required or not, because it's first hand required authorization, we cannot generalize that even second hand requires the authorization. Same way, if you are importing a printer or if you are importing a AC, authorization not required if it is first hand. But if it is imported in second hand, whether authorization required or not, we need to check. For that reason, they have given what is the treatment in case of second hand goods. You don't have to first refer to the regular provisions. Don't refer to the regular provisions. What are the regular provisions I mean? Don't refer to the regular list of goods for which authorization is required or not. Don't refer to the basic policy. You try to interpret it differently. In case of import of second-hand goods, what is that? This second-hand goods are divided into two: capital goods and other goods. Capital goods means a general definition. It is like plant, equipment, appliances, etc. that will come under capital goods. Whereas other goods, non-capital goods. If it is non-capital goods, when you are importing it as second hand, definitely authorization is required. Requires authorization. See this. Whereas, if it is capital goods, if it is 5 capital goods, authorization is required. What are they? Number 1, ACs, laptops, AC, laptop, then computers, diesel generator set and photocopiers. So 5 things: computer, laptop, air conditioner, diesel generator set and photocopiers. If these 5 capital goods are imported second hand, irrespective of its policy for first hand, it will be restricted, that is requires authorization. What if it is any other capital good? So, which goods require authorization? If it is imported second hand, its first hand may not require authorization, but its second hand definitely require authorization. What are they? Capital goods 5 plus goods other than capital goods. If it is other than these 5 capital goods, authorization not required. Whereas, if we import reconditioned or refurbished spares of these goods, if we import reconditioned or refurbished spares of these capital goods, then that reconditioned or refurbished is second hand. That spare should have at least 80% of the original spare's value or life. That is, we are importing a spare, its life is 8 years, its original part, that is not a second hand or a first hand one, is 10 years. Now the second hand or reconditioned one or refurbished is having a life at least 80% of the original life, therefore it is allowed without any restriction. So no restriction, that is freely importable. But a certificate is required from a chartered engineer that it has at least 80% of the residual life of original spares. This point. What if it does not have 80% of the original life? Then what should we do? In that case, you need license, you need authorization. Why they have put such a kind of restriction for second-hand goods, even though its first hand may not require authorization? Because in the name of the second-hand goods, the computer waste and other hazardous waste should not enter into India. So what the developed countries will try to do? They will try to export the waste which is not required there, because not every waste is recyclable, not every electrical waste is recyclable. So they will try to dump it into India, and here people will be importing because they get commission for importing. So like that, the radioactive or some contaminated materials or waste, computer waste, e-waste should not enter. That's why there is a restriction like this. Then next area is about import or export of gifts. And so far what we have seen is import and export of second-hand capital goods, or only import of second-hand capital goods, only import of second-hand capital goods. Now we are discussing import or export of gifts. In case of import of gifts, whether it is restricted or not, we need to check. That is, there is one actor who is endorsing a foreign perfume brand. Now that actor has received few bottles of the perfume brand what he is endorsing. Generally, import of perfume is restricted. Now, this perfume bottles which he is getting as a gift, he don't know, therefore he cannot get a license or an authorization, but he needs a custom clearance permit because he don't know what goods are there in the gift box. But the department will know because there is a description to be given on the gift. Therefore, if the gift parcel contains a product which is restricted, then the importer of such gift should be getting customs clearance permit, then only the package will be handed over to him. Suppose if the gift parcel contains books, some novels, which do not require an authorization if it is normally imported, then no need to produce any customs clearance permit. That is this. Next. In case of export of gift, definitely the one who is exporting will know whether the product is restricted or not. A person who is getting a gift, importing a gift, don't know which product it is. But a person who is exporting a gift knows the product. Therefore, if it is restricted, even though it is sending it as a gift, it requires authorization. Same way, if it is unrestricted goods, logically no authorization is required because even if you send it regularly also authorization not required. When you send it as a gift also authorization not required. But when you are exporting as gift, which means you are not going to get as consideration anything. Therefore, if the value of the gift exceeds 5 lakh rupees, if the value of the gift exceeds 5 lakh rupees in a year, then you need to definitely get an authorization. That is this point about gifts. The next area is about certain other points. In that, this import and export of second-hand capital goods already we made a discussion. And we need to now discuss about these 3 points, point number 1, 2 and 3. What is that? First, IEC. IEC refers to Import Export Code. Import Export Code. IEC refers to Import Export Code. That IEC should be obtained by every person who wanted to import and export, and that will be given by DGFT, that will be given by Directorate General of Foreign Trade. In the same way, if there is an exporter who want to enjoy some incentives under foreign trade policy, there is an exporter who want to enjoy some incentives under foreign trade policy, such an exporter should get registered in an Export Promotion Council. Such exporter should register in an Export Promotion Council, and that Export Promotion Council, in his place, when he registers, he will get a certificate called as Registration cum Membership Certificate. For example, I am a commodity exporter. Say I am exporting cashew nuts. So there are some commodities, dry fruit council, promotion council. So with the dry fruit export promotion council, I need to go and register myself as a member. I need to get the registration of membership certificate, then only I am eligible for the export incentives. That is, this RCMC is required for exporters in order to avail benefits under this policy. Then next, second, authorization means license, which will be given by DGFT, and the terms and conditions of that authorization is specified by regional authority. Now, say for example, you are one importer and you want to import, say, some raw materials. Say rubber you wanted to import. And rubber is under restricted. So you got the license or authorization to import, and they have given a validity of 9 months. So that authorization, whatever you have got to import the rubber, it has a validity of 9 months, and it also has a validity of or restriction like how much quantity can be imported like that. Now you imported rubber for 9 months. Thereafter you want to continue to import. Now you are going to the DGFT or regional authority and asking them to renew. But they say we cannot renew. Can we ask that as a right? No, we don't have the right. We don't have the right. We need to be ensuring that within the time, whatever we can import, and thereafter if they are not extending the license, which means that it is not a right on our part. Maybe at the time when the authorization was given to you, at the time there may be a policy of, okay, let's import to some extent. But after 9 months, as excessive imports are made, they may take a stand not to allow. It's up to them. Same way, say one other importer has got the license to import some minerals, uranium, and you are also going and making an application, your application got rejected, you cannot take a stand that it's my right, it's my birthright, I should be getting nothing like that. So authorization is not a right. DGFT or RA has power to refuse to grant or renew. They may refuse to grant or they may refuse to renew. Then third point is about SEZ. Whenever there is a special economic zone which is selling goods in DTA, SEZ is governed under SEZ Act 2005. So we don't have any specific provisions related to SEZ in foreign trade policy because we have a separate act called as SEZ Act 2005 and that act will overrule anything. Now, there is a special economic zone here. That special economic zone has sold some goods in domestic tariff area. Now, in this case, whether it is considered as deemed import for the person in domestic tariff area, yes, it is considered as deemed import and customs duty along with IGST is payable. And in the same way, usually scrap which is generated in SEZ, scrap is generated in SEZ. That scrap, definitely they cannot export, so they will be selling in DTA. Generally, scrap if you import, you need an authorization. Now also it is deemed import of scrap from SEZ, whether authorization required, no, not required. Just if you pay customs duty, that is sufficient. That is the unit in DTA has to just pay the customs duty, that is sufficient. No need of any authorization. Even though it is deemed import of scrap, it is not import of scrap, so authorization not required. That is this point number 3. Then, next area is about export promotion schemes, various export promotion schemes. Here we have advance authorization and duty-free import authorization. These are called as duty exemption schemes. So this AA and DFIA is called as duty exemption schemes because under this AA and DFIA we can procure goods without payment of customs duty. So that's why it is called as duty exemption scheme. So it is called as duty exemption schemes. So you don't have to pay. It's not duty remission, whereas duty drawback is duty remission. First you pay and then get it as a refund. That is known as duty remission schemes, whereas this is duty exemption schemes. And in this, you can import the material, and mainly this is for raw material, not for capital goods. So when I say goods, I am referring to raw material. I am referring to raw material or inputs. I am not referring to capital goods. Because for capital goods, we have another scheme called as, EPCG, Export Promotion Capital Goods Scheme. So this is for import of raw material without payment of customs duty. Now, we are trying to understand what is the difference between AA, Advance Authorization, and DFIA, Duty Free Import Authorization. First difference is that both are licenses. Advance Authorization is also licensed, Duty Free Import Authorization is also licensed. If you are having Advance Authorization, that license cannot be transferred to any other person. But duty-free import authorization can be transferred to any other person. once you fulfill the export obligation. That's the first difference. A is subject to actual user condition which cannot be transferred. Means to whom it is given, that person only should import and he cannot transfer the license. Whereas DFIA, when it is given to a person after fulfillment of export obligation, that license he can transfer to any other person. That is the first point. Then, every time when that license is given, what is the advantage that the person is getting? Say you got advance authorization. What is the advantage that you get? You can import the material without payment of customs duty. So you are saving some money. So when you are saving some money, that's a loss to me as a government. So I will put a condition on you that you should be achieving a minimum export obligation. So minimum you should export this much. Because with what objective I am giving you exemption, so that when you export, some foreign currency reserves you are bringing to the country. With that objective only I gave you. And now when you are going for just equal to whatever you have imported if you export, then it is no benefit for me. So therefore you should achieve a value addition. The export obligation is with the value addition, not that you import export to the same value. No, something more should be brought into the economy, and that value addition condition is there for advance authorization as well as duty-free import authorization. For A, the value addition condition is 15% in case of goods other than T, and in case of T, it is 50%. Get this? Whereas in case of DFIA, we don't have any such classification. It is always 20%. That is the minimum value addition required. Now, transferability of the material imported. See, this point actually is not there in the study material. Therefore, my advice could be you don't have to read this point number 3. I just gave this point number 3, but no need to read this point number 3. So leave it. You just write it off. No need to read this. This is not there in study material. And applicability of gem and jewelry sector. Whether A is applicable for gem and jewelry sector? Yes. Whereas DFIA is not applicable. Then there is something called as standard input-output norms. What is the standard input-output norms? For every unit of output, how many units of material is required is known as standard input-output norms. If for your industry, SION is fixed, then only you can go for DFIA. Otherwise, you need to go for AA only. If SION is fixed for your industry, then only you can go for DFIA. See there. DFIA can be issued only if SION has been fixed for the product to be exported, whereas AA is not like that. Because there is a logic in this here. In AA, can you transfer the license? You cannot transfer the license. Which means that whatever material that you need, you will import and you will only be using. Whereas under the DFIA, after completion of export obligation, you can sell it to others that license. Which means they will import the goods without payment of customs duty. Then definitely we need to restrict. So standard input-output norms. Next, the question will be, why are you importing too much when your SION is this much only? Like that question can be asked by the regional authority for that reason only. Next bumper here is AA. All customs duties are exempted including IGST. All customs duties, including IGST, is exempted. Whereas in DFIA, only basic customs duty is exempted. What about social welfare surcharge? Basic customs duty is 0 because social welfare surcharge is calculated on basic customs duty, not on assessable value. Remember, social welfare surcharge is not calculated on assessable value as basic customs duty. Social welfare surcharge is calculated only on basic customs duty. If basic customs duty is exempted, then social welfare surcharge is also not there, but all other customs duties will be applicable in case of DFIA. Then, applicability of authorization. So, to whom this authorization will be given? Manufacturer, exporter. There is a manufacturer, exporter. Merchant exporter tied to supporting manufacturer is eligible for advance authorization. That is, who is called as manufacturer exporter. One who manufactures it and exports it is known as manufacturer exporter. One who purchases it and exports it is known as merchant exporter, and the one who manufactures, that is the ancillary industries, will be called as supporting manufacturer. Now, when advance authorization will be given to manufacturer exporter, it will be given to merchant exporter also, it will be given if he is having an association with the supporting manufacturer. There should be some kind of joint venture. Suppose if the merchant exporter is independent, not having any association with the supporting manufacturer, then only DFIA can be given. AA will not be issued. Please see there. A merchant exporter, even though not tied to supporting manufacturer, is eligible for DFIA. Then, when available, it shall be issued on pre-export basis with an entitlement. That is, you have to import before export and then it will be given. But now with the CA certificate, it is given on post-export basis also. Now based on CA certificate, it is issued on post-export basis. It is issued on post-export basis. Whereas DFIA is always issued on post-export basis. That is, you don't know what material is required, you will casually import, and based on your exports it will be given, so that will be used for the next time import. That is about DFIA. Now, there is one question. We have striked off one point related to that. I have imported some material under advance authorization. Now, I have completed the export obligation. Can I dispose of that material in the DTA? That is normally, yes, I can. Both under AA as well as DFIA. Whatever material that I have imported under AA or DFIA, license cannot be transferred, but the material can be transferred after fulfillment of export obligation. Next, how to calculate the value addition? Because we need to achieve 15%, 20% and 50% like that we have discussed value addition. How to calculate that? We have to take FOB value and CAF value. For example, my FOB value of exports, equals to rupees 125 lakhs, and CAF value of imports. You should always take in case of exports for the purpose of arriving at the value addition. Even otherwise for valuation we should take FOB value, and for imports we need to take CAF value. CAF value of imports equals to rupees 100 lakhs. So what is the value addition? 25 lakhs. So that is nothing but 25%. So how to calculate that? 125 minus 100 divided by 100, that equals to 0.25, or 25% is the value addition. That's how you need to calculate the next thing. So what you should do, you take the CAF value of imports, add the percentage, you will get the value addition to be achieved. That is the export obligation. Already you have got the export obligation, just substitute in this way, you will know the percentage, and if that percentage is more than the prescribed percentage, means you have achieved the value addition. So that way you can do. Then, when you take CAF value of imports, whether imports under advance authorization alone should be considered, or DFIA alone should be considered, or even other imports should be considered. That is, I am calculating the value addition, boss. I am calculating the value addition. I am calculating the value addition. Now see this. Imports under advance authorization. Imports under advance authorization equals to rupees 50 lakhs. Imports under advance authorization is 50 lakhs. Imports on payment of duty, imports on payment of duty equals to some 20 lakhs. Now, what should be my, this is under advance authorization, means what should be the value addition? Value addition is 15%. Assuming this, it is other than T. Other than T, then the value addition will be 15%. Now, what should be the export value? The question here is, what should be the export value? Now, my question is, whether we need to take 50 plus 20, whether we need to take 50 plus 20 into, that is plus 15%, or just 50 plus 15%, that is, whether we need to take entire this, multiply with 115% and see, is that the answer? Or should we take only this 50 lakhs and then multiply with 115%, and that's the answer, which should be taken as the answer. So don't take imports on payment of duty. Don't take imports on payment of duty. You take only imports under advance authorization. And all that multiply 115%. Why to multiply 115%? Even you can add 15%. Both are same. So you will be getting the value. So what should be the export value? You take 50 lakhs into 115%, so that comes to, or 50 lakhs plus 15%, both will be same. 57.5 lakhs should be the export value. Done. Now, another case, what if it is not export, that is import on payment of duty? It is not import on payment of duty here. It is not import on payment of duty. It is imports under duty drawback, some other incentive. Imports under duty drawback, DBK, imports under duty drawback. Say this is some 100 lakhs and this is some 50 lakhs. Now, again the same, should we take 100 plus 50 multiply with 115%? Or should we take 100 and multiply with 115%, which is the correct answer? So this is wrong here. This is wrong. We need to take both, multiply with 115%. Why? So we should not take 50 lakhs into 115%. We should take, that is like 100 lakhs into 115%. We should take 150 lakhs because even DBK is under an export incentive. Even DBK is under an export incentive, so you need to take. So therefore, it will be 150 lakhs into 115%. So 150 plus 15% or into 115%, that is 172.5 lakhs will be the export value. Hope you understood. So what should be taken as the CAF value of imports? We should take the CAF value of imports, whatever is covered under authorization, A or DFA plus imports under duty drawback. If you have imported anything upon payment of duty, you did not enjoy any export incentive, so don't add it for the purpose of value addition. That is this point here. Then, next, there is one note, you can see that in case of free of cost material supplied by foreign buyer, notional value of material shall be added to the CAF value and also to the FOB value to arrive at the value addition. What is this point? Let's try to understand with an example. That is, there is an importer in India. There is an importer in India, and this importer in India is making some finished goods, and raw material is supplied by the exporter outside India. There is one importer. Let's take A Limited, and A Limited is having a client B Limited, client of A Limited. So B Limited is client of A Limited who is in foreign country. Say B Limited is in USA and A Limited importer is in India. Now what happens The client of A Limited has sent some material, raw material, and this raw material is used in finished goods, RM processed, and he made finished goods, and this finished goods are sent to the client of USA. These finished goods are sent to client of USA. Now in this case, importer is importing some material and he is using it in finished goods and which are exported. Now to calculate value addition, what we should do? There is import here, even though that he is sent by client of A Limited, B Limited in USA, but that is import for this importer. Therefore, take its notional cost, and include it in both FOB value of exports as well as AF value of import. That raw material is getting, that raw material we should take the notional cost and we should include it in both the values. Both the values means both AF value of import as well as FOB value of export that we should do. Then, next we have EPCG scheme. Advance authorization and duty-free import authorization is for the purpose of import of material without payment of customs duty. Of course, in advance authorization, you don't have to pay any customs duty, and in duty-free import authorization, you don't have to pay basic customs duty as well as social welfare surcharge, whereas the other duties you need to pay. EPCG is for import of capital goods without payment of any customs duty. All customs duties are exempted, and sometimes there will be concessional customs duty also payable. So there will be saving when you have a EPCG license. That is, the saving is like, sometimes you don't have to pay customs duty, sometimes you have to pay concessional duty, so there is a saving. And how much ever you have saved into 6 times you need to achieve the export obligation, export turnover over a period of 6 years. That is, I am importing some capital goods worth rupees 100 crores. 100 crores, the duty saved is 30 crores. Now 30 crores into 6 times 180 crores I need to make exports for the next 6 years. Then whatever benefit I have saved, whatever benefit I have got, I don't have to pay. Otherwise, if I am not able to achieve that export obligation over a period of 6 years, whatever benefit I have enjoyed by way of importing capital goods without payment of customs duty, I need to pay back along with interest. So that is common for all export incentives. Any export incentive, if you enjoy the benefit, then you have an export obligation. You need to achieve that export obligation. If you are not able to achieve that export obligation, then you have to pay back whatever the benefits that you have got out of that incentive along with interest. Now, under EPCG, it permits exporters to procure capital goods at zero customs duty. Sometimes concessional customs duty, zero customs duty, or concessional customs duty. In return, the exporter is under an obligation to fulfill. And what is that export obligation? Obligation to export products covered under authorization. That is, under advance authorization also I am exporting something. Will that be counted? Yes. Even though you are exporting for advance authorization or duty-free import authorization, even that is also considered for EPCG. Not that it should be separate. Or permission in terms of quantity or value, or both, as may be prescribed or specified by regional or competent authority. This export obligation consists of 2: specific export obligation and average export obligation. What is specific export obligation? I told you 6 times the duty saved he need to achieve as exports. That is specific export obligation. Whereas average export obligation is that he need to achieve at least the average of the last 3 years as the exports for the current year. It is like over a span of 6 years I need to achieve, and I should also maintain the consistency in my exports. That is a logic behind this specific EO and average export obligation. Now you can see that specific export obligation is 6 times the duty saved on capital goods imported, and it should be fulfilled in 6 years. In that 6 years again we have 2 blocks. In the first block of 1 to 4th year I need to achieve 50%, and in the second block of 5th and 6th year I need to achieve balance. Whereas average export obligation, I need to maintain an average of the last 3 years. If I am in the first year, no average. If I am in the second year, the previous year is the average. If I am in the third year, last 2 years will be the average. And if I am in the fourth year, last 3 years will be the average. That way, the license holder can either procure the capital goods, whether used for pre-production, production or post-production, from the global market or domestic market. So which means, so far what we have discussed in advance authorization, duty free import authorization, EPCG, there is a duty saving on imported goods. Now there is a duty saving even with respect to local procurement under these three schemes. That is, you don't have to import, you can purchase locally, still you don't have to pay GST. You can, rather than importing capital goods, you can purchase locally, still you don't have to pay GST. So therefore, these 3 schemes, AA, DFIA, EPCG, is equally applicable for local procurements. Domestic market also. Then once I get the license, what is the validity of that license? Means what is the period for which I can import the capital goods under this scheme? For a period of 18 months. For a period of 18 months, I can import the capital goods under this scheme. This 18 months shall be taken from the date of issue of authorization. Can this be revalidated? That is, can this 18 months be extended? See the next word. Revalidation of EPCG authorization shall not be permitted. Then import of capital goods shall be subject to actual user condition. What does it mean? Which means that until the time you fulfill the export obligation, whatever capital goods you have imported should not be sold in DTA. Subject to actual user condition when? Till export obligation is completed. After that, if you want, you can sell or transfer. And one major restriction is second-hand capital goods. Second-hand capital goods and some power plants, etc. are ineligible for EPCG. Second-hand capital goods and some power plants are ineligible. I have not given power plants. You can make note, power plants are ineligible for EPCG. Then the next area is MEIS and ACIS. Merchandise export from India scheme and service export from India scheme. What is this? That is, whenever I am exporting some goods or services, I will be incurring lot of administrative expenses, and therefore in order to provide me some relief, they are giving me duty credit scrips depending upon my export performance. For example, when I am exporting 500 crore worth of goods, a 5% on 500 crores, that is somewhere 2.5 crores, because the 10% comes to 5 crores and 5% 2.5 crores. I will be, I think it's wrong, 500 into 10% 50 crores and 5% will be somewhere 25 crores. Okay, sorry. So 25 crores worth of credit scrip I will be getting. What I can do with this credit scrip worth of 25 crores? I can use it for payment of customs duty on import, because not everything is eligible for advance authorization. So I can import some materials which are not eligible for advance authorization by payment of customs duty out of this scrip. Same way, I will be paying some license fee, and for payment of that license fee, license fee is for foreign trade policy. Under this policy, we have to pay some license fee to the DGFT. For that also we can use. and still there is a balance, you sell it to another person. Who will buy, sir? For example, I am importing some goods and I have to pay customs duty. Now I will buy credit scrip from you at a discount. Say the credit scrip value is 1 lakh. I may buy at 80,000 and I can use it to the extent of 1 lakh. So I am getting a benefit of 20,000. So therefore I may buy. And what is you are getting? You have the credit scrip which is of no use. So when you are selling to me, at least you are getting 80,000 rupees. And whether this sale of credit scrip is taxable under GST? No, it is exempt under GST. We don't have to pay any GST on this transfer of credit scrip. Then this MEIS and ACIS, MEIS same, both works on the same ideology, that is a credit scrip will be given. MEIS is for export of goods and ACIS is for export of services. When MEIS benefit? Export of notified goods to notified countries. So it is notified goods to notified countries. Whereas here it is notified services to any country. That's the primary difference. And what are those notified goods? What are those notified countries? None of our business. There is a big list. So depending upon that, we should be knowing what are notified goods and services which are exported to notified countries when it covered under MEIS or SEIS as the case may be. For SEIS there is no notified country, it can be to any country. Then second, who is eligible for this benefit? If it is MEIS, every exporter with a valid IEC, of course without IEC they cannot export, even EOU and SEZ also can enjoy the benefit. If I am an EOU or an SEZ unit, when I am exporting, I can also get the benefit of MEIS. Whereas for SEIS, we have few conditions. First, the service provider should be located in India. Service recipient, wherever he is located, irrelevant. He may be in India also. Sir, when service recipient is in India, how it will become export? That is, service recipient's place of business is outside India, but at the time, or residence is outside India, but at the time when he renders services, that service is rendered in India. Possible. For which the payment is in foreign currency, that will qualify for a CIS, service export from India scheme. So service provider should be in India, and that service provider should have an active IEC. There is a catch here. Usually people who are into service sector will not be obtaining IEC because they are not importing or exporting any goods. So therefore I have seen many service providers who are not having IEC. Because of that reason they will be missing this benefit. Should have an active IEC. Then minimum NFE, net foreign exchange earnings, minimum NFE during the previous year. Here previous year does not mean really the previous year. Previous year means that year for which the services are rendered, because usually after expiry of that year only you can go for SEIS benefit. It's not that you export service now immediately you can go for benefit. You have to wait until the end of the year. For entire year you can go for SEIS application, which means that that financial year for which service is rendered is the previous year meaning. So I have given there year for which benefit is claimed. Year for which benefit is claimed is known as the previous year, and that year for which you rendered the services, the NFE in case of individual or sole proprietorship firm should be $10,000, and for others it should be $15,000. For example, I also exported something, and for which I got some $10, means $10 into 5%, will I get the benefit? No. Because what should be the minimum net foreign exchange earnings? That too they did not use the word gross, they use the word net, which means that income in forex minus expenditure in forex, we should take out the expenses out of the income, and that net should be $10,000 in that financial year, or $15,000 in case of other than individual or sole proprietorship. Then only they will be eligible for SEIS benefit. And what is the benefit under MEIS and SEIS? It depends upon like 2%, 3%, 5%, but that will be given in the question itself. That percentage will be given in the question. You don't have to worry about that in exam, but that percentage, if it is MEIS, should be calculated on, very important, should be calculated on FOB value as per shipping bill or FOB value realized, whichever is lower. FOB value in the shipping bill or FOB value realized, whichever is lower. That is important. Whereas in case of SEIS, anyhow it is on the year, on the NFE they will be claiming that, though that percentage should be calculated on NFE. NFE refers to income in forex minus expenditure in forex. Then so usually FOB value in the shipping bill or FOB value realized, whichever is lower, so whatever we have realized will be lower. Not the case, because at the time when you invoice in the shipping bill, you will be mentioning $10,000 and on that day it could be somewhere 65 rupees per dollar. At the time when you actually realize, it could be 75 rupees per dollar, you are realizing more, then also you should take only the FOB value. And suppose something reverse happens, which I don't think so it will, that is at the time when you invoice it was 75, but actually when you realize it was 65, it's good for the economy but bad for the exporter. In that case we need to take whichever is lower, that is whatever he has realized. Then procedure and time limit here. If you want benefit of MEIS, you need to file a form called as Form ANF3A. Form ANF3A. Suppose if you want SEIS benefit, you need to file Form ANF3B. And this ANF3A or 3B needs to be filed with the DGFT or the regional authority. In case of 3A, that is for MEIS, should be filed within 12 months from let export order. Who will give let export order? Customs officer will give. Within 12 months from let export order or within 3 months from the date of uploading of shipping bill in DGFT server. It goes like, first I will file a shipping bill and then I will get a let export order. This shipping bill, customs department should upload in the DGFT server. Leisurely they will do. Now 12 months from let export order or 3 months from the date when customs officer uploads the shipping bill in the DGFT server, whichever is later. So that is the time limit within which it should be filed. Beyond that it is filed, there is no benefit. SEIS, when it will be filed, see MEIS will be filed on consignment wise. You export it, for that consignment you will claim MEIS. But SEIS is not that way. SEIS is for the year for which you have exported the services. Form ANF3B within 12 months from the end of the relevant financial year. So yearly you have to go for it. Then some special points here for MEIS. FOB value of export of goods through courier or foreign post office using e-commerce only up to rupees 5 lakhs per consignment shall be covered for reward under MEIS. That is, you are an e-commerce operator and you exported you are not an e-commerce operator, you are exporting through e-commerce operator. Now when you are exporting through e-commerce operator, will that also be calculated as export and is it eligible for the MEIS benefit? Yes, provided the value is restricted up to 5 lakhs. That is the word here, which means if it goes beyond 5 lakhs, for 5 lakhs we will be getting the benefit. 5 lakh 25,000, so 5 lakhs. 4 lakh 80, 4 lakh 80. Then for SEIS, some special points. Supply of service from India to any other country, normal, or supply of service from India to service consumers of any other country. Service consumers of any other country, actually they belong to outside India but they are in India. Say a tourist is coming, so to him you rendered services, eligible for SEIS, provided the foreign exchange through international credit cards should be received, and that is considered for NFE. So ask them to use the American Express card, that will be eligible for SEIS benefit. Then next, ineligible. It's a very important theory question. What are the categories of exports which are ineligible for MEIS or ineligible for SEIS can be asked. Repeatedly they have asked MEIS. First, supplies from DTA to SEZ is deemed export, but that is not considered for the purpose of MEIS. But sir, SEZ you said, SEZ exporting is considered, but someone selling to SEZ is not considered for MEIS. Then exports through transshipment in India, that is a big vessel will come to India, some of the goods will be unloaded in India and the remaining goods will be taken to a place, to another country, say to Nepal it is taken. Now the transshipment takes place in India. Because the transshipment, that is moving goods from one ship to the another ship or one aircraft to another aircraft, like that, the transshipment may take place in India, but actually it is not export from India, so therefore you will not get any kind of benefit there. Then deemed exports. So we have some deemed exports apart from supply to SEZ. Supply to SEZ is also deemed export as per SEZ Act. Whereas under foreign trade policy, we have list of deemed exports like what we have in GST. In case of that deemed exports under foreign trade policy also, you will not get any benefit under MEIS. Next, SEZ, EOU, EHTP, STP, BTP, FTZ products exported through DTA. That is, all these units, if they directly export from there, they are eligible. When they sell it to DTA and again it is routed here, from here, in that case, will that SEZ, the EHTP, etc. will claim any benefit? No. The one who is really exporting only will claim that benefit. Then exports which are subject to minimum export price. There is a price fixation by the government. And in that case, when you are exporting, it is not eligible for MEIS. And lastly, exports by units in free trade zone. So these are the ineligible categories for MEIS benefit. Then SEIS only 2 years. Supply of services from DTA to SEZ. Under GST it is zero rated supply. Will it be eligible for SEIS benefit? No, strict no. Then telecom sector. No. Then investments and capital receipts. So it should be like consideration for services rendered. It should not be in the nature of investments or capital receipts. So this is about MEIS and SEIS. The next area is status holder under foreign trade policy. What is this status holder scheme, or what is this about? That is, under foreign trade policy, certain exporters are given status, star status. Depending upon their star status, they are eligible for various benefits. And we have 1 star to 5 star status. It all depends upon their export performance. That export performance should be taken based on not current year, based on current year and the preceding years. And this export performance, if they have achieved that limit, then they will be given a star status and they are eligible for certain benefits. Now what is that export performance? To get 1 star status, you should be exporting $3 million. If you want 2 star export status, then you should be making $25 million. If you want 3 star, it should be $100 million. If you want 4 star, it should be $500 million. And if you want 5 star, $2,000 million. So that much of exports you should be making to get that star status. So this will be computed for 1 year or for more than 1 year. You can look into the special points below. You need to take current year and previous 3 financial years. Current year and previous 3 financial years. So 4 years cumulative is this number. Then you will be getting the status, and that too, you should be achieving the star status in 2 out of 3 consecutive years. For example, it is like, so 2009, 2010, 2011, 2012, 13, 2014. So here it is somewhere $3 million. $3 million, whereas in 2010 it is $4 million, and in 2011 it is $10 million, in 2012 it is $20 million, in 2013 it is say somewhere $15 million, and 2014 it is again say $10 million, like that we have. Now every year you need to take current year and the previous 3 years as the export performance. This is exports per annum. This is exports per annum. But what we need export performance. Export performance. How to calculate export performance? Current year and previous 3 years. So take $3 million and here you take 3 plus 4, that is $7 million, and here you take current plus preceding 3. So 10, 4, 3, that is $17 million, and for 2012 current plus previous 3. So 20 plus 10 plus 4 plus 3, that is $37 million. And 2013, be careful, don't take everything. You need to take current and the previous 3. So 15 plus 20, 35 plus 10, 45 plus 4, $49 million. In 2014, current plus previous 3. So 10 plus 15, 25 plus 20, 45 plus 10, $55 million. So this is how we got. Now this is the export performance. How we calculate export performance? Current year and previous 3 years. Current year and previous 3 years. Now 2 out of 3 years you should have achieved $3 million, then you will be given 1-star status. Now you take the first year, 2009 3 million, 2010 7 million. So you achieved out of 3 years. So what's the first block? 3 years. So 2009 to 2011 is the first block of 3 years. For this you have achieved 2 times $3 million in 2010. So you will be given 1-star status. 1-star status in 2010. Then what is the next one? 25 million. So for 25 million, where are you achieving? You take the next block, that is 2011, 12, 13. In this block, you have achieved 2 times $25 million. So therefore, when you achieve 2 times, that is 2013. So therefore, you will be given 2-star status. So like that, it will be given here. So this is about at least 2 out of 3 years. Whereas in case of, you can look into the footnote there, however for gems and jewelry sector, we will calculate current and previous 2 years. For all other sectors, we will be taking current and previous 3 years. For gem and jewelry sector, we will take current and previous 2 years. Suppose in my main class, suppose if I have done, if I have not discussed this, if I have made it wrong, extremely sorry. So you can correct it. Maybe if I have missed this point. And next, export promotion zone scheme. The 4th area. First we discussed advance authorization and duty free import authorization. Then we discussed EPCG. Third, we discussed MEIS, SAIS, and continuing to that reward schemes. Now we have not discussed one important point, that is here status holder. Status holder, what are the benefits? Very, very important theory question. Status holder, what are the benefits? Once you are a status holder, authorization and customs clearances on self-declaration basis. So no need to have any person to declare. So you don't have to do the packing under the supervision of the officer. You can do self-packing and self-certification. Then fixation of input-output norms on priority within 60 days. Why input-output norms are required? DFIA will be given only when you have input-output norms standard. Otherwise, you will not be given DFIA. DFIA is beneficial because you have to just achieve 20% value addition. That's the only risk. But just 5% extra beyond advance authorization. But the material what you import can be transferred and that authorization can be transferred. Again, another disadvantage there is that only basic customs duty is exempted. But let it be, the IGST can be taken as credit. So therefore, if you want DFIA, and that will be fixed to you on priority basis within 60 days. Exemption from furnishing bank guarantee. Usually you need to, every exporter has to furnish, but that is exempted. 2-star export house shall be and above. 2-star export house and above means except 1 star. Except 1 star. So except 1 star. So all others are permitted to establish their own warehouses so that they can import without payment of customs duty, keep it in the warehouse. Whenever they actually take from the warehouse, they need to pay customs duty. So that advantage they are having. Then green channel clearance. So this is like usually examination, that is physical verification of the imported goods will not be there. So once goods are imported, based on documents, the appraisement will be done and immediately the goods will be released. That is known as green channel clearance. So that advantage these people are having. Above 3 star, so it is not applicable for 1 star and 2 star. And finally, they can self-certify as made in India for the purpose of getting the benefits under Make in India initiative. Then export promotion zones. So we have 4 export promotion zones. EOU refers to export oriented unit. EHTP, that is electronic hardware technology park. STP, that is software technology park. BTP, biotechnology park. These 4 are called as export promotion zones. And what are the units covered under this scheme? All units other than trading. So they should not be engaged in trading here. They should not be engaged in trading. Other than trading units are covered under this scheme. Means they can do manufacture, they can do service, or they can do any activity except trading. Then what are the tax implications? Here, first, whenever they are importing goods or services, with respect to import of goods, entire customs duty including IGST is exempted. But whenever they are importing services, it is not exempted. They need to pay GST, IGST under RCM. That is this. So IGST payable and by EOU under RCM. Now they are receiving locally, they are purchasing locally. What is the impact of that? Whenever they procure locally, that is not exempted under GST and GST is payable. But for a person who is in DTA who is selling it to EOU, EHTP, that may qualify for deemed export under GST, there are 2 options available to that supplier. He may charge GST to EOU or he may not charge GST to EOU. If he is not charging GST to EOU, then he will be getting refund. If he charges GST to EOU, then EOU can pay and they will get it as a refund, or alternatively they can take it as ITC and get refund of unutilized ITC that we discussed in refund chapter. Then when EOU, EHTP, STP or BTP is making outward supply normal, they need to pay GST and the recipient can take it as ITC. When they export, anyhow export of goods or services is 0 rated for GST, even it is exempted under customs. Now what they can do? They are paying IGST on import of services, even on local procurements they are paying GST. With respect to local procurements, they have 2 alternatives, that is either claim refund under deemed export scenario, or they can take ITC and they can get it as a refund of unutilized ITC concept. So that is what I have given as 2 alternatives. Then, is there any time limit for production under this scheme? Yes. First, whenever a person wanted to start business in EOU, EHTP, etc., they need to make an application to the Board of Approval, BOA. That Board of Approval will give letter of permission or letter of intent. Once this LOP or LOI is given, within 2 years they should commence the production. That's the time limit. Within 2 years they should commence the production. If they are not able to commence the production within 2 years, then they can go for 1 year extension, which will be given by the Development Commissioner. DC refers to Development Commissioner. If that time limit is also not sufficient, they can go for further 1 year if 2/3 of the activities related to production are completed. Still they want extension, again they need to go for the Board of Approval, and if they want they can give the extension. So it is like LOP or LOI plus 2 years normal, thereafter plus 1 year by Development Commissioner, thereafter plus 1 year only if 2/3 of the activities are completed. Even if they want extension beyond that, they need to go to Board of Approval. Then what is the validity of this LOP or LOI? Once it is given, what is its validity? 5 years is the validity. So 5 years you can be operating as EOU, EHTP. Suppose if you want beyond that, you need to go for extension and they can give next 5 years. Development Commissioner will be doing that. Who can establish EOU? Is there any investment criteria? Yes, there is an investment criteria. You should be having minimum 1 crore in plant and machinery. This is only for EOU, but for other units, no such restriction. Even board of approval may allow lower investment criteria to start in EOU. That's up to them. Then, if you want to convert an existing DTA unit into EOU unit, then you should be having 50 crores in plant and machinery as investment, or you should be having an annual turnover of 50 crores. So that is this. So it's rather than converting DTA into EOU, it's better to start a new one here. Then NFE condition, yes, for 5 years, they have a validity of 5 years. In 5 years, they will be making imports and exports. So they should achieve positive NFE for a period of 5 years. Cumulatively, if you see, initially there may not be positive NFE, but for 5 years cumulatively, and we see there should be some positive NFE. So these are the conditions with respect to export promotion zones. The last area is deemed exports. Already we have discussed few deemed exports under GST. What are they? Supply of goods to a person who is holding advance authorization. Supply of goods to a person who is holding EPCG. Supply of goods to EOU, EHTP, STP. So these three are considered as deemed export even for foreign trade policy. That is the first three. Then remember 3 projects. There are international competitive bidding project, which means the project for which the bidding happens across the globe, that is international competitive bidding project. Second, we have nuclear power projects. And third, projects financed by UN or international organization. With respect to these 3 projects, if there is any supply made, that is also coming under deemed exports. Then one more, supply of marine freight containers by 100% EOU. There is 100% EOU which is supplying freight containers, and that freight container should have been exported outside India within a period of 6 months. Then that is also considered as deemed exports. What is the benefit in case of deemed export? 2 benefits here. Advance authorization and duty-free import authorization means I am making deemed export, I can import the material without payment of customs duty. Or I can pay customs duty. When I make deemed export, I will be getting refund of that customs duty paid, that is deemed export drawback. One is duty exemption, another one is duty remission. First, advance authorization, I can import without payment of customs duty and I can give it to the deemed exports, that is I can supply. Or second, I can pay customs duty on import, and when I am making deemed exports, I will be getting deemed export drawback, which means like refund of customs duty paid on import. So these are the various incentives available. So with this, we completed foreign trade policy. Thank you.